Good morning and welcome to the early bird. And here we're looking at the S&P 500, and we've been looking at the top of wave 4 coming through here at 1,200, and that was the same for the Dow on the 11,500. And then what we've been seeing is we've seen this 5-wave structure to the downside through here. So the norm is to look at a 61.8 retracement level, so it comes in at 1170 there, and we thought that maybe this little section here, this little A, B and C here may have been enough, but it's a little bit small, I guess, in comparison to the trend that has come down through here in terms of balance, proportion and ratios. So and also with corrections as well, they are the weakest link in using Elliott, and Elliott's only got really sort of 3 rules, unfortunately. It would be nice if there was more. However, with corrections, they can simply double in size, and that's kind of what we're seeing here now. We don't have a lot of resistance in terms of supply here. Supply means sort of sellers, a lot of volume sitting here. So it's, it doesn't give me that sort of confidence there. So kind of got to look to a little bit sort of higher, where it starts at 1180 here. And that would also be part of subgroup 2, which is 65, 72 and 80. So within this little area here, we do have a trend line coming down through here. I'm not a big fan of trend lines. They do get broken. I prefer volume over everything else. So, but look, anyway, let's just see how this plays out through here. I'm a little bit unsure about the actual wave structure coming up through here. I'm not sure if that's fine as the ABC. I can see it. I can see this as being corrective. That's not my problem. It's just a matter of what price point that we find the turning point there. The A wave here is fine as it stands. The B wave could be down to this point here, or it could be to over here. Okay, so then we get the 5-wave structure up there. That's what I'm kind of thinking. We'll see how we go, but we just need to play out through here. The rally terms here seem much shorter than on the Asian markets. The Asian markets have a lot more leg room to move up higher, and which leaves our local market, the ASX 200, in a rock and a hard place in terms of being pulled by both of these. So we'll need to take in other markets into consideration, and one of those would be copper, and we'll have a look at that shortly. This is the Dow Jones here on a 30-minute chart, and it's the same sort of picture here. We've had this A and B and C rally through here at the 11,500, which is a medium level for us. And while the market is generally under this level here, we would consider the current larger degree of pattern still bearish, and still looking for a downside at 10,000 before we see a stronger bounce to the upside there. Yeah, so once again here, the 61.8 retracement level through here is up at 11,200. We'll see how that unfolds into this space there, and the corrective pattern I've drawn a little bit differently here. Not, like I mentioned, I'm not quite sure about it. I can see that the move is corrective. It's just a matter of where this pans out. Does this B wave here sit where this wave 2 is here? And once again, as well, as I mentioned yesterday, that if the market moved up here, yes, the 61.8 is important. However, the supply, the sellers, would still be up here. So as that price moves up there, they can end their grief and loss and sell out, cover themselves at that point there, and that would be the pressure of this. The market is moving up on the basis of poor economic data and possible stimulus coming in, but they've got their fingers crossed on that one. We'll see what happens there. Yeah, and the other markets fall into line here. The same with the UK market. In terms of pulling back up to its 61.8 retracement level from its last high here. In terms of trading, though, this is the the 5,000 and the minor group here, which is minor group 1, which is 100, 200 and 300. So you're dealing with 200 here. Expect some sort of corrective pattern across here because of the 61.8. After that, if it does find support, then you'll use the sub levels to trade long on that one there. And our market's the same but different as well. I thought we would have dropped through here from yesterday, but that's not the case. And now we have to look for higher ground here as well. And I'm just looking at the structure here. So we were looking for 5 waves down through here, and that's quite a clear 5-wave structure, an impulse wave there. So I'm quite sort of happy about that. It's just about where we pull back up to. And like you can see here, there's no sort of... there's not a lot of trading done around this point here, so it's not a strong resistance point. The strong resistance would be further up through here, and we'd be looking at the 4272 area there is where the supply would be in. So we kind of got to look at this in terms of a rally. It's quite big really in terms of what's occurred through here. And as I mentioned before, the rallies in the Nikkei, the Indian market and the Hong Kong Hang Seng and so forth have got more space to push to the upside in terms of their structures, where we will be pulled somewhere between the US and the Asian markets there. So we do need to consider ourselves moving up a little bit higher through here. All these wave structures coming up through here, you can still see that this is in 5 waves here. And look, that may be the top there. If this is correct in terms of the wave count here, in terms of an A wave to here, and that's fine, then the A, the B and the C to here, then as a B wave, and then the C wave up to here as an ABC counter trend rally, then we would see this as wave 1, wave 2, wave 3, wave 4 and wave 5. A little bit of a problem with that. We've got overlapping wave structure over the 4th and the first wave here. That's a bit of a no-no. But when it comes to derivatives, the leverage there can allow that to kind of play out here. So look, we're still in a bit of a guessing game here with the wave count. So what we'd be looking for here is strong support on 4200 here, the minor trading level. If support was actually found on 4300 there, like a nice solid support, then what happens in that case is that this is part of minor group 1, like the 100, 200 and 300, based off the 4000 here, minor group 1. And with group 1s, it could be sub-level group 1 or it could be minor group 1. If support is found on top of group 1, then it's free to move to the upside. And what I mean by that, psychologically, we tend to forget about the closest largest number and start to look at 45 at that stage, 4500. So that's something that we'll look for. But today we're playing with this area here. Would have to expect some sort of correction here, but we'll be opening sort of higher as well. The cash should open around the 42, just above the 42, but the 42.20 is pretty much the 61.8 retracement level as well. So what we can look at here, if solid support is found for the day trades, is found on top of subgroup 1, which is this 42 here is the minor trading level, 10, 20 and 30. If you can find solid support on 30, then you can put the stop at 17 and then move up from that point there, taking profit at the midpoint, the 50, and then wait for that to become support and then start scaling out at 65, then at 72 and wait for 72 to become the support, then move back in. But use the levels to trade with and take the money. So one of the drivers for all of this, because we're sort of stuck between a rock and a hard place between the other markets, this is the copper market here, and the main point here is the 400 here. If this develops a strong support here, then we need to be positive at that stage there. But as it stands at the moment, of sort of looking at this move from here down to here as 5 waves, and this as an A, and then a 3-way structure for the B wave and a C wave up to this point here. So what we could say, if we found support on 403 here, then we would be looking at a more positive side to the upside, and we would have to consider this correction here, still a correction, but we would have to consider a 5-wave structure to complete this correction coming up to the 420 mark. And if that's the case, then we're going to be rallying higher and would need to run with that. So we'll be looking at covering all shorts at that stage. We'll be tightening shorts up at this stage today, but this is a bit of a line in the sand, and this would also be for the Australian dollar as well. So if you're trading the Australian dollar at 105, then while the copper market is above 400 there, then look at that as well. But the Australian dollar and the S&P 500 that we were looking at will be working in harmony as well. So not only the the copper market here, but also the S&P 500, and you can also bring the euro into that as well. And when we're bringing the euro into it, we also bring the US dollar index into it, but I'll just at 74 being above or below that. We'll get to that in a moment. Just have a look at the oil market here, and with the oil market here, we're looking at a top coming into play here. We were looking at a 5-wave structure coming down through here in terms of 1 and 2, then the 5 waves down through to here for the 3rd, the 4th, and the 5th. So that's might not look clear to you, but it's quite clear for us. So we'd be looking at this as an A and a B, and then 5 waves up for the C here. So we're looking for a top in here. In terms of trading, we would consider the 85 here, sort of the midpoint between the 80 and the 90. So that's a very important aspect here. We can also see at this stage we've got support here. This has done all the normal things in gleaning support here. So in terms of coming down, finding demand, pushing up, coming back and checking for support there. The support is still flimsy, but it is there at this stage here. We would expect a top to come in at 86.50, 86.72. We know that the supply is up through here, but would certainly expect weakness here, but would also expect this to follow stock as well. So let's see how we go there. So you wouldn't short it from this point here because it's above the midpoint here. You would have to wait for it to become resistance under there. So the analysis is telling us we're looking for a top. The levels are telling us that we can't short until we've got the 85 as a retested resistance. So that's what keeps us safe. The Elliott is good, and it can be very accurate, but it can be way out and wrong as well, and that's why we use the levels to get consistency in terms of our trading. The gold market's doing pretty much what's expected as well. We knew that we'd have a reaction at the 19 there, and because we're moved under the 1850 here, then we're in subgroup 1 here, 10, 20 and 30 here, which would slow this market down through here. But once it comes under the 1820 there, then it's definitely it's confirmed as a part of 1800 there. And as part of 1800, we need to look at the bigger picture as well. We need to look at this previous low down here at 1720 too. So that's what we need to be looking at there. So we could get a swing way down through here. This is still impulsing to the downside here. You can see the long as it's expanding. See that move there? That was sort of what it is. This one here was longer, and these ones here are longer still. The little rallies here are getting bigger. So it's basically, in its own ways, expanding to the downside. So what we normally do with corrections is that we just pay attention, observe the first structure that comes into play to see if it's in 3 waves or 5 waves, and then we'll work with it from there. But yeah, let's just see how we go there. We're looking at a 4th wave that can pull back to the 1720 here, so just be aware of that. But it's going to get pretty rough and bouncy around the 1800 here, and also in the subgroup 1 area here. The other sort of flip side to this as well would be swapping gold for dollars, and this is the US dollar index here. We can see that we're getting lower highs through here, but I just want to point out that this this pattern down here can also be viewed as a positive pattern in terms of a 5-wave structure up here for wave 1 or an A wave, and then an A and a B and a C wave here for wave 2. Then we've got wave 1 and then back for wave 2, and then we can push up for wave 3 here. So that's a real reality. So we just need to allow this to play out. If the 73, 72 becomes the resistance here, then that's a different story. And we also know too that the 73.50 here in the bigger picture, not just this picture here, but in a much larger picture as well, opens the door for a tour to the south. So let's just allow this to play out further. We've been allowing it to play out. We're still sort of getting there. It does at this stage, it appears bearish because of the lower highs and being under the 74, which is our line in the sand, but it hasn't really given us any confirmation yet. It hasn't broken down through here yet. And if it does break down through here, then we'll see the euro push to the upside, and with the euro pushing to the upside above the 144, then we can expect the S&P 500 to move up in that way too. So the Australian dollar as well. So we see the 144 across here, which is it's been playing a part for a long time, just not this little section here, but long time back in history there as well. It's a Fibonacci number, and it's also where Gann's 1212s meet as well. It's also part of the 72 number. So it's got a bit of a squaring in terms of time and price here, and it's playing out there. It's trying to get support up through here. It's done all the right things. It was resistance through here. And now it's shot up through there and come back and checking. So it's doing all the right things in terms of pushing higher. The only sort of bearish aspect to this is that it does appear to be 5 waves down through here and then a 3-wave counter trend through here. So this particular pattern here is actually a bearish pattern, even though it's sitting above the level there. So we would have to take out this high here at the 45, say 20, to really confirm any further upside there. So it's a bit of a bull trap. So we really need to be sort of careful at this stage here. So we're just waiting on a little bit more time and a little bit more sort of information, because as we've been talking about the euro and the US dollar there, they're in the daily patterns, in the much bigger patterns, there's 2 possible directions for these markets. So we're not going to jump the gun just yet, but we're moving into that corner, and we're looking at it in terms of relating the euro to the rest of the market. Then we would see the euro to the downside coming down through here in line with the S&P 500, and then we would see the US dollar index to the upside. Of course, that would be looking at the Australian dollar as well. Australian dollar's got its own little sort of makeup really and thing, but we still got to consider it as part of the other markets. It just does follow the S&P 500 a lot, so quite closely on the hourly. So, but look, we're looking for this structure coming down through here in an impulse wave, and this wave here being corrective to the upside. So this wave being corrective to the upside in terms of an A and a B and a C wave to here in 5 waves. That's fine. Now this move down through here is in 5 waves, so we're considering this down for 1, and we're still considering this back for 2 here and to roll over through here. Now if that's not the case here, then we're going to be getting a larger correction, which will still be a correction in terms that this A, B and C here would have to become the A wave, and this would be the B wave in here, and then we'll see a C wave come up even higher through here, and looking at 5 waves moving up through here. We don't know if that's the case yet, but we also need to consider what's going on here. This 105 here is the midpoint between the $1 and the $1.10. The $1.10 is the first minor level, then $1.20, $1.30, which is all minor group 1. So this is the sub level through here at 105, but 5 is the second strongest number in the market. 1 is the strongest, then 5, then 8, and we need to see this sort of play out through here. So on the on the hour sort of 4-minute chart through here, we can see that there has been support through here. We've seen it come up and react through here. We can see that this is corrective in 3 waves here, an ABC. So normally that's the case there. If that's an ABC through here, then that high will be taken out. That high has been taken out, and we're certainly moving to the upside. So what we've got, this can still be a B wave here, but we've got a 5-wave structure from this point here to this point. So we can consider this a wave 1 here, or an A wave. Then we've got an A and a B and a C wave to here, and this move to here. So at this looks like the third. So there should still be another push to the upside here. So the way to look at this now in terms of trading it is, yes, the 105 is the main support area here, but then we've got this smaller group here, this 10, 20, and 30. So this 30 here is the group 1 basically. So what we do here is that we normally trade from this number here through to this and exit here. Then we wait to see if this becomes the support here. So it's still got to play out here. Even if this pushed up through here, it still need to come back and find support there. So it would be a little bit where's these tools here? It'd be a little bit be something sort of, even when it does push high through here like that, don't worry about the wave 2 there, but if it pushes up there and makes a new high there, then it would still come back down in some sort of A, B, and C thing here. Then after that, if it finds support at that stage, then you can trade it up from there. But you need it to have that support there. So we need another high here, then we need an A and a B and a C, then to sit on. If it sits firmly on that top of that group 1 there, that's what you're looking for. Support on a group 1 enables you to move up to the next level. So this as a group here, but the idea of a market moving up through group 1 here, 10, 20, and 30, it's group 1's job is to hold the price to the closest largest number here, like this. And if the market was actually coming down into group 1 here, then it'll act like a filter, because there will be orders sitting here, and then it will be really bouncy through coming into this number here. So we use it to scale out, coming down into it, and we use it to scale into going long up this way here. But we definitely need that support there on the 30 there to move up to the midpoint there and beyond. So we are looking at a positive structure here, but it'll only be positive here if we find support on the 30 and then move up from that point there. Then we can start looking at a larger 5-wave structure to the upside, where we would be looking at yes, following this line straight up through here in terms of up for 1, back for 2, up for 3 here, back for 4, and up for 5. So we'd start heading higher up to the 105.72 there and the 106, the old highs there. Okay, that sort of pretty much sort of covers it in a sense. And yeah, so on our local market, it's just the cash market will open up at 4,200, and it's really about finding support on that. Unfortunately, we'll have to cover some of our short positions and lock in what we can, and we'll take it from that point there. But a couple of key points is that the US markets, the S&P 500, even though it's bullish, we're looking for a top to come into play here at the 61.8%. So going long can get you trapped, but at the same time, if you're prepared to take a little bit of a risk, then a short-term trade to the upside may be viable simply because of the Asian markets. When you're looking at the Nikkei and the Hang Seng, they've got a fair bit of movement to the upside that they can play out. Our market, as I mentioned here before, this is just another chart here, but we're looking at this 42.20 here being the 61.8 retracement level here, but we can expect it up at the 4272 there for the cash market today. The supply starts in at 4,300 here. So this is going to be the main resistance area here, and this is the area that it can fail in at this point here. So 42.72 and the 4,300 is where the resistance starts to come into play there. And as mentioned, if our markets find a robust support on 4,300, the top of minor group 1, then we'll be more bullish than we are now. As I mentioned, the S&P 500 and the Dow are at very close to their rally point highs for their wave 2 and will be heading down from that point. Our markets and the oil market and some of the Asian markets will tend to rally stronger. We just got to be careful where we get our timing to get in. If you got in yesterday, well, that's fine. Otherwise, we really need to wait for here, because if the market gaps up and you get stuck here and the US market turns, then we'll be trapped at the top there. Alrighty, I'll adjust the stops on the short trades and have a look to see if there's anything that we can trade long for the day. But at the end of the day, it's probably a good idea to at least take 50% of the profits out. And also Friday as well. If Friday has a strong closing on strong volume, then we can expect that to follow through on the Monday. If it's not the case and we close lower on the Friday, the closing price is lower than the opening price, or any sort of bearish sort of scenario there, then that's likely to follow through on the Monday. So how a market closes on the Friday is very important, how it opens up on the Monday, as the momentum will be there. All right, good morning and good luck. Cheers.